What's up everyone, Dylan here. I wanted to hop on for another episode of the weekly analysis video. This one's going to be a quick one, so let's hop right into it. Before I get into analysis, I wanted to make sure that everyone is aware of the busy week in terms of economic events. Starting tomorrow, we have CPI data at 8:30 a.m. Eastern Time. Thursday, we have PPI and jobless claims at 8:30. And then Friday, we have retail sales at 8:30 as well. There's some other events in there, but those are the main three. Last week, both indices were able to have a nice rally, right? S&P and the NASDAQ were able to get back a lot of the losses from the previous week, right? You could see both weekly candles ended up closing at the higher extreme from the previous week. So part of the reason that they were so strong was because Apple finally woke up. Apple had news last week, which boosted a 13.3% weekly gain, which was its largest weekly gain since 2020. The reason it rallied was because there was news, right? Apple CEO Tim Cook announced a $100 billion boost to U.S. investments during a White House visit. Companies investing domestically in tech will be exempt from semiconductor import tariffs. So again, that was perceived as very, very bullish, and as a result, it rallied in a large manner. So prior to last week, Apple was showing clear relative weakness relative to a lot of the other Mag 7 mega cap names. So if you look at like Microsoft, Nvidia, Google, Amazon, Meta, Apple prior to last week was underperforming. So last week gave the overall indices a nice boost, and a lot of those gains came from Apple specifically, especially because it's such a highly weighted name. Apple's a top 3 weight in both S&P and the NASDAQ index. So it's very, very influential, especially when it moves in a large manner. Okay, so I wanted to go over some key areas to look at going into this busy week. And then I'm also going to talk about a specific trade idea that I am going to be looking at going into tomorrow. So we'll get into that. So very, very simply put, S&P 500 futures, the bulls remain in control as long as price remains above the anchored VWAP latched onto August 1st. Okay, clearly you can see that ever since August 1st, the anchored VWAP has acted as key support, right? Each time that price has gotten back into that area, the bulls are quick to defend that pullback. So as of this moment, the anchored VWAP sits right at 63.60 on the S&P, but as long as price is above that anchored VWAP, it'll continue to slowly move higher and higher and higher. So I recommend drawing it on your end so that you don't have to rely on me to tell you. Okay, so as of this moment, it's 63.60, but again, as long as price stays above there, it's going to move higher and higher very slowly. So 63.60 as of this moment, as long as price remains above that, the bulls are in control, meaning that there's a higher probability for dips to get bought. If and when the S&P, if and when it gets below that anchored VWAP, I would then look to see if rallies below get rejected at that anchored VWAP, where then I would flip the sentiment from buying the dip to selling the rip. Okay, so that is my line in the sand, that anchored VWAP. And as long as price is above, I would imagine that bulls are going to be in control. And then if and when price gets below and then stays below, I would not be surprised to see additional selling pressure. Okay, to the upside, we have this level here on the S&P, 64.58-ish. It was double top resistance in late July, right? And on the second attempt, it got up there for a few hours only to roll back over and have a large move to the downside. So in plain English, it could not sustain above 64.58. So between 64.58 and call it like 64.70, right? That 12-point area remains resistance until proven otherwise. And you could do the same structure on NASDAQ as well, using its previous all-time or its current all-time high and gauge price action around 23,845 if and when price moves to the upside. So again, those two areas to the upside on the S&P and the NASDAQ, and then to the downside, that anchored VWAP is very, very important on the S&P. If that breaches, I would expect for a lower move down to potentially test August 1st lows, which line up with that support 62.46 on the S&P, as well as 22,805 on the NASDAQ. You could see multiple areas of support on both indices down at those levels. So those would be the next areas to the downside if that anchored VWAP were to breach, in my opinion. Okay, so going into the specific trade idea that I am looking at going into tomorrow, we are talking about the Russell 2000, right? RTY. You could see that this thing has been showing relative weakness relative to the S&P and the NASDAQ, right? Because the S&P and the NASDAQ are very, very close to all-time highs, whereas the Russell futures on the spot futures, right, are over 13% away from that same reference point using all-time highs. So this is from Goldman Sachs, a guy named Rob Quinn. He writes, in the past two commitment of traders reports, which is from the CFTC, they post it every Friday, it's public knowledge, hedge fund Russell 2000 shorts surged to a new record. Specifically over July 22nd to August 5th, hedge funds short sold $4.3 billion worth, which is the largest two-week amount for at least the past 10 years. The resultant level of outstanding shorts in notional terms also marked a new high. So here's a video or a picture from Goldman, right? You could see hedge fund length in U.S. index futures from the Russell, right? Hedge fund net length in Russell 2000 futures in billions. And you could see as of today, hedge funds are short about $13 billion worth of Russell futures, okay? And this chart, this diagram goes back to at least 2009, and you could see that this is the most amount of shorts in the Russell futures since 2009, so over a decade, okay? And then we have another picture from Subu Trade on Twitter, right, where he marks, right, you could see large speculators and hedge funds are almost record short. So again, and he even goes as far as saying that commercials are actually almost record long. So there's a very, very big spread between large speculators and commercials. But in this case, Goldman Sachs is putting a lot of emphasis on the fact that hedge funds have a very, very large short position. So what does this set up for? This sets up for, especially going into tomorrow, it sets up for a potential short squeeze, right? So if CPI comes out in a dovish manner, right, below expectations, this could be setting up for a long setup on Russell. And I'm going to go ahead and draw a nice looking trend line, right, stemming from the all-time highs, or near the all-time highs, I should say. Right, I'll go to a 12-hour, okay? So stemming from the all-time highs to some of the highs in late July, we have this trend line, right, that currently sits right around 2274-ish, right? If CPI comes out below expectations, right, it should move interest rates, okay? So basically, the Russell is the most sensitive index to interest rates. When interest rates move high, it is more expensive to finance debt, which squeezes profit margins, okay? Because the Russell is made up of a lot of growth names, right? A lot of smaller cap growth names that have higher debt amounts, right? And with their higher debt amounts, with rates going up, it becomes much, much more expensive to finance that debt. So when rates go up, it negatively affects the Russell, right? It acts as a headwind. When rates go down, right, it can act as a tailwind, which can potentially propel the Russell. So I'm not necessarily looking at the CPI print tomorrow specifically. I'm more so going to be looking at price action, because if price action really gains some momentum to the upside, right, if Russell rallies, what's going to happen to those hedge funds, right, that have a ton of shorts, right? They're probably going to need to stop out of those shorts underwater, right? They're going to take a loss on the shorts, and by taking a loss on the shorts, they have to buy back the shorts by covering, and by buying back the shorts, what does that do? It adds more fuel to the fire in terms of pushing the price up even higher because of that buying pressure from stopping out. So again, I will be looking at this particular trend line, and if and when it breaks to the upside, it could see some additional traction because of the record high hedge funds short. Okay, so that's it from me. I will talk to you guys soon, and hopefully this video is helpful, and feedback is always appreciated. Peace.